Hello and welcome to Wealth Research Group Titan Week. This week we're going to feature one of the greatest titans I've ever seen in the world of finance. He's been a personal friend of mine and more like a mentor. For about 6 years, I first contacted him as a subscriber to his business Future Money Trends, and today we are very, very close friends. I'm very happy to have him on. He's probably one of the key people in the mining sector today. His name is Daniel Ameduri, and we're going to have him on for 15 to 20 minutes to probe his mind about what's going on today in the economy. Dan, how are you?
I'm doing great. Thanks for the warm introduction, Lior.
No problem. Hey, let's jump right into this. At WRG, Wealth Research Group, our core mission is to strengthen our financial fortress every day. What does that mean to you?
I love the idea of having a financial fortress. My wife and I personally used to talk about building a financial moat, and this was extremely important to us. It forced us to have a very, very high savings rate. And what that moat meant is after having lost a lot of money in 2007, 2008, even though I was right about the economy, I was very wrong about some of my real estate investments. After that experience, we wanted to build a financial moat to where we would basically, most people focused on getting rich. We were focused on never being poor. And so our financial moat, and I guess a financial fortress, starts with having no debt. So you eliminate the idea that you're going to finance a vehicle, first and foremost. You eliminate all credit cards, at least initially. If you I'm not talking about using points or something, but an actual need or dependency on credit cards. And then you make sound decisions. If you live in an area where the rent is cheaper than a mortgage, then you rent. If you live in an area where the mortgage is cheaper than the rent, then you buy the house and get a mortgage. Otherwise, you become a debt eliminator. And once you become a debt eliminator, you want to keep your focus on cash flowing assets. Most people focus on capital appreciation. That should be about 10% of your net worth or less. That is the fun side of making money, but it's also the riskier side. So most people will focus on a 401k or a general stock portfolio, and they only care about up. But instead, a financial fortress is only focused on cash flow. How much is each one of those stocks or each one of those properties or any of your savings accounts yielding you? How much money is coming in from multiple streams? And you just relentlessly focus on building your income. And so to me, financial fortress, when I think about it, is having multiple streams of income, a strong focus on cash flow, and being a debt eliminator.
That's some very important points, because most people don't know, but historically, dividends, like income from stocks, have accounted for more than 50% of the S&P gains during the last 200 years. Most people think price appreciation is important, but without dividends, stocks are nothing but good bonds. So it's a very important point that you bring up. Focus on income and become addicted to income and multiple streams of income instead of just watching the price on screens all day. So, Danny, I want to ask you something. In the big picture here, there are some exciting technologies in medicine and that are allowing people to live much longer and fuller lives. But overall, people live in the midst of opportunity. But most people worry all day since they lack education about wealth principles. What are some of your daily practices to become wealthier every single day?
Well, I didn't know it at the time, but I would say ignoring most of the news is, and I know people will find that shocking, but it's rare that I know exactly what the Dow Jones is doing. It's rare that I know what gold is doing. It's rare that I know what any of my individual investments are doing on a day-by-day basis or even a week-by-week basis. So one daily habit is not allowing the news to determine my emotions or determine what my investments are going to be. Being an unreasonable investor where you're focused on buying only where you can have an equity capture, or you're buying at a deep discount. You're buying something that you know is going to work. You might not know the timing of it. That's perfectly normal. But certainly I understand people's anxieties and concerns over the economy, or the where you can feel trapped and not know what to do. But I would remind people of what Lior had just said, that you have great technologies, and technologies ultimately will overcome all of the misallocation of capital from the government and from big businesses that are tied in with the government. And I would also remind people that are concerned about the current restructuring the U.S. economy is in, and the current depression that FutureMoneyTrends.com believes that the U.S. economy is experiencing, is that in 1870, the U.S. experienced a depression. In the 1920s and early 1920s, there was a small depression. 1930s, there was a deep, long depression. 1970s, people experienced very, very high inflation and stagflation. And then you go to other countries outside the U.S., and there's all kinds of countries. Germany was completely torn to shreds after World War II. It is now one of the strongest economies, certainly the strongest economy in Europe. Early 1920s, late 19-teens, Germany had experienced hyperinflation. Japan had 2 nuclear bombs, 2 atom bombs dropped on the country. Argentina has experienced several economic collapses. The U.S. itself has experienced 4 different currencies. So look, I know everybody looks at our present-day problems and says, this is it, this is the end, no way we can move past this. But one thing people need to understand, especially people living here in the U.S., where we've only experienced up, with brief cycles of depressions, but really, it's been all up since the 1980s, with the exception of the financial panic. But even then, the Fed and the government is trying to print enough money to make everybody feel comfortable as if we are still living in the 80s and 90s, but even though we know we're not. However, with that said, this is normal. Uncertainty and economic resets and currency crisis and major moves in the stock market up and down and massive misallocation of capital by central bankers and central planners, it's all normal. This all happens. We're just living in it, this one. And in 10 years and 15 years, our kids will worry about a new one. And in 50 years, our grandkids will worry about a new one. But it's all normal. We will get through this. Humanity will continue going forward. As long as we want to eat, as long as we want to use our iPhones and contact with people all over the world, as long as we want to listen to our music, as long as we want to use toilet paper, the world's going to keep advancing.
I completely agree with you. The world has this this mantra that it just doesn't end. It will continue to go on, and every generation climbs a wall of worry, basically, and goes on to better and more beautiful advancements. I couldn't agree with you more. Listen, Daniel, what we want to ask you now is, you've been studying finance since you were a teen. What are some of the biggest risks you do see out there today that people do need to pay attention to, not in the long term, but in the short term?
In the short term, the biggest risk is always in the mirror. It's what you're going to do in the near term. It's are you going to let your emotions overtake your investment strategy, whether you're buying a stock or you're buying real estate. I speak to people every day who are buying real estate that doesn't cash flow because they think that one day it will cash flow or the appreciation will save them. You cannot do that in volume. It works in the near term, but it's a bad plan in the long term. It's a bad plan in the short term in case something ever happened where you could not compensate and subsidize that property. I talk to people every day who are buying a stock because it went up 300% and 400%. So they expect it to go up continuously forever. I talk to people every day who are selling stocks because they've gone down, let's say, even as high as 20-25%, even though the fact of the matter is it was a great buy at, let's say, $1, and it's an even better buy at 75 cents. So I would say that the biggest risk is always yourself in the short term.
I understand what you're saying, and basically, if I can rephrase it, what you're saying is your biggest risk is not being educated enough and rushing into things that you cannot possibly know how to do without proper preparation. Is it basically what you're saying?
Sure, proper preparation and education is very important, and it's also important that you overcome your emotions, you discipline your emotions, because no matter how much you know or think you understand, the markets are always going to surprise you. The markets are always going to do something different than you would expect, and when that happens, especially in the short term, that is when the mastery of your own emotions will come, to be the most important thing you can do as an investor.
Sure. And how do you handle to manage those risks yourself? What do you do personally to kind of make yourself one of those 4% of people who actually beat the market consistently? Because I know that you have had incredible success.
It's very difficult. And, for me, our investment strategy is very simple. When it comes to stocks, whether it's a blue chip stock or a micro cap stock like a junior minor, you partner with the people, because ultimately corporations and businesses they're just backed by people. It's just people from top to bottom. And so overcoming your emotions helps when you, especially in like the junior resource sector, when you know the people involved, you know that, okay, this is the right person. These are the right people. I'm involved and I'm tied to the right people. They're doing everything they can. They will continue to do everything they can. And because they've surrounded themselves with the right people, we know that if there is a problem, the company will have plenty of offers to receive help in case there was a problem. It's interesting. Some of the biggest winners, I take Brazil Resources, for example, which is a company that has seen an all-time high. I want everybody to think about that. Everybody's making a big deal about the junior miners having a big resurgence in 2016, which they have. But if you look at the TSX Venture as a whole, we're up, but we're barely up past the 2000 bottom. If you look at some of these high-quality companies, they have rallied big, but none of them are at all-time highs. Some of them are just 1/10, 1/5 of what they were in 2011. Some of the companies that we've stuck with and continued to accumulate during the bear market when they got cheaper, even though they continue to advance their projects, these companies today are at all-time highs. And, I look at First Mining Finance, another company, we stuck with the right people. These companies are at all-time highs. Everybody questioned the strategy in the beginning because they were using shares to purchase assets. But the entire time, Keith Neumeyer, who's been in the business for 30 years plus, was telling us, look, gold sells for $50 plus per ounce in the ground, and I'm buying it for $5 to $10 an ounce. Trust me, this is going to work. And of course, the stock is more than doubled, and people have done really well. So I think aligning yourself with the right people and really, truly understanding and appreciating and accepting that when you buy a stock specifically, you become an owner in a real business. You're a fractional owner in a business, and it's not just a little ticker on your trading account. It's not just a casino with a chart. These are real businesses. So partner with the right businesses, partner with the right people, and I think that is the best way to cool your emotions.
Daniel, that's fantastic. I think it's very important for people to understand that businesses are basically people and money and decisions. That's it. Now, people make decisions and money is allocated, whether it's on projects, whether it's on new products and services, expanding the company, going out of the country internationally. It's in the bottom line. It's people making decisions every single day. That's why you got to partner up with the best, with the cream of the crop. It's very important. Daniel, how can people find you, your website, and everything that you're doing?
Well, go to futuremoneytrends.com. We have a weekly wealth digest. We put it out every week, and it's on personal finance, cash flow ideas, and simply advice that I had to learn the hard way. So futuremoneytrends.com, you can subscribe and become a member for free. We also have a paid membership, but I would encourage you to take us for a test drive, see if you like us, and then check out our stock suggestions. We put out about 3 or 4 a month, and we're taking positions right now in the junior resource sector. I don't think there is a newsletter that has a track record, long-term track record, as good as futuremoneytrends.com in this sector.
Well, I can personally attest to that fact. Danny, we're very excited to have you here today with us, and hopefully we'll have you back for more.
Look forward to it, Lior. You have a great day.
So today we had Daniel Ameduri of Future Money Trends. It was a privilege having one of the titans of the mining sector with us. We asked Daniel first about the concept of financial fortress. As you know, at Wealth Research Group, financial fortress is one of the major themes. We like to be richer and more educated every single day, and that requires discipline and effort on our part. That's why we publish so many very varied and diverse articles, like the personal finance every Sunday and every bi-weekly article on stock market, the big picture, and obviously the wealth letter, the 365 wealth letter that you can certainly subscribe to for free on our homepage. Secondly, we asked Daniel about the daily practices he uses. I know every single wealthy person that I know has his own routine every single day. I like to wake up at 6:30 and read for an hour and a half for sure, and end my days with reading as well. That's part of my routine. We asked Daniel what his routine were, and we were very excited that he shared with us some very key insights. Then we asked Daniel how he sees the market today with regards to risks, and it was a very unique answer that he told us the biggest risk anyone can have is himself. And that goes to show that even the most successful people always understand that they can't be always right. And that goes with our asset allocation model on our special reports page and our position sizing. Every investor who sees the long-term picture knows that he must avoid catastrophic losses, and that's how you do it, by position sizing and by intelligent asset allocation. The fourth question we asked Daniel is how to manage these risks, and he told me he tunes out the news. That's a very important lesson. Be very independent and very contrarian in your thinking. Do not go after the mainstream ideas you see on CNBC. And that's what the 365 Wealth Letter, the free 365 Wealth Letter for Wealth Research Group does. It goes into how to be independent and how to view the markets with a fresh eye. So I hope you gained a lot of value from this interview, and do check out the special report that we have lined up right below. Thank you.